talking about earnings, Mayuresh, what are the earnings that really stood out for you? Because Polycab is the big one which is actually reporting numbers. The street was keenly waiting by for those numbers as well. Just the fact that the company has still reported numbers and on an year-on-year basis, there's an increase of almost 500 crores in terms of revenue. 4,340 crores is what the company has reported versus 3,800 crores. And the profitability too is looking better at over 400 crore rupees. The stock had seen a sharp fall when that entire ruckus around the, the tax authority surveys, etc. was brought on. But for the last couple of days, it has been recovering a bit.
Oh, it has been, and I think the fact that they've declared their numbers signed by the auditors, even though the case was a 4-year-old case, amidst a lot of, still confusion on whether or not it was Polycab to begin with or not. Much like the company clarified that they didn't get any IT notice. But I think the markets should actually like these numbers, and you should see a bit of a pickup further perhaps on account of that, because optically it looks like a decent set. We don't have any estimates to go by, but an EBITDA uptick of about 13%. The PAT as well has jumped up quite a fair bit on a year-on-year basis. That's Polycab in trade for you.
But you know what? I think for the wires and cable segment, there's a decline in the EBIT, even though there's a revenue increase. So my guess is the margins in wires and cable segment has come off a bit. Even if you look at the FMEG segment, which is fast-moving electrical goods, the losses have actually expanded on an EBIT basis. So the loss this time for the FMEG segment is 36 crore versus 6 crore last time, and the EBIT for the wires and cable segment is 547 crores versus 556 crore, even though the revenue has increased to 3,904 versus 3,804. So there is a definite miss on the margins, I believe. We'll wait back and get more details, and I'm also looking whether there's any exceptional or not. For me, I don't see any big exceptional or any big note right now from the management which alludes to that entire the tax surveys, but it does say that the income tax authorities conducted surveys and we have extended the full cooperation. The company has not received any written communication from the department as yet. The management, after considering all available records and facts known to it, in the view of the same, has said there is no material adverse impact on the financial position of the company and no material adjustments are required. I think this is the big statement that we should be putting out, because they are saying there is no material adverse impact on the financial position of the company and no material adjustments were needed to be made in at least the 9 months gone by. So that is something that we should talk about a bit more. But let me toss it to you, Mayuresh. What do you make of this entire flip-flop that we have seen on Polycab, and any initial, sense on the numbers that we have?
Afternoon, Anisha. No, I think the numbers look decent enough. And obviously, I think the kind of scope that the wires and cables business has, unorganized to organized, expectations in terms of export opportunities as well. I think the landscape is pretty robust for the entire sector and companies within this sector as well. So numbers absolutely in line with expectations as far as Q3 is concerned. But to a large extent, I think what is expected to happen in terms of the tax implications is something that the street would like to watch out for. And that will remain as the biggest overhang for the stock from a near to medium term perspective. So I think numbers quite reasonable, quite okay. There are structural tailwinds for the sector. But I think the tax issue is something that will keep the stock, especially in terms of price action, in a range-bound fashion.
Okay, that's Polycab in trade for you. You saw a bit of a recovery coming in, and again, that recovery in Polycab is getting sold into. And I think the devil lies in the detail, Anisha, like you flagged off, that there are some segmental pressures, and now the stock has slipped into the red. On an overall basis as well, the consolidated margins have actually seen a dip down. It's 13.1 versus a comparable of 13.6. So, aside of this entire IT department issue, which the management is very categorically clarified on in their press release, it's the earnings purely that the market is reacting to right now, that some of their segments are under pressure. That's Polycab in trade for you, and I think this stock may perhaps further drift down because the numbers are looking a little bit weak segmentally. That said, let's take a look at where LTIM is settling in at, still down about almost 11%. Kunal, does that challenge the IT rally? Because even today, there are names like TechM, etc., which are still holding out. But LTIM, does that pause that good run that we saw after TCS Infosys' numbers?
No, I think what this could do is this could get the traditional wagon back into the IT stocks where the large caps would start to outperform. So, there was a very strong kind of an outperformance from the mid-cap IT names. over the last 6-8 months, over the last 1.5 years to be precise, I think from September 2022 lows, where many of these IT stocks in the entire IT index hit a major bottom for themselves. In the last 3-4 months, you saw the large cap IT stocks going into a slight recovery phase, but then the mid cap IT stocks, they managed to recover exceptionally well. But I think after this kind of a price action move from L&T, Infotech Mindtree, even for L&T Technology Services and many of the other mid-cap IT names, I would probably sense that the large-cap IT stocks should try and get back into an outperforming stage. In fact, over the last 3-4 days, you've actually seen the IT sector being a lot more resilient, especially the large-cap IT stocks. And I strongly believe the likes of Wipro, Infosys, TCS, HCL Tech, they could make a very strong comeback for the next, say 1 to 3 months at least. So even if you have a short-term kind of a time horizon for the next 1 to 3 months, I would believe many of these IT stocks should be at least 10 to 15% higher from current levels, specifically large cap IT names.
Okay, that's the take on large cap IT names. That's Polycab still settling in and digesting that earnings reaction. But the stock, of course, has given up all of its gains so far. Remember, after hitting that record high of 5,700 thereabouts just as of December 2023, we've all seen the fall that has happened in the stock. Still, it's sitting at about almost a 28% discount to the industry at the current valuation, which at the peak was about 31 times still. So the scope for disappointment and the scope for the fall in the stock is, of course, much higher. And you can see the stock drift down by about almost 1% now as we speak. But Naresh, want to get your reaction in on Polycab after the recent correction in the stock. What's your reading on the charts?
So once we see such a large fall with very large volumes, the best case is to actually go look at an exit closer to the same prices where it gapped down from. So it gapped down around 4,900 levels, which is where 4,900 to 4,500 was the drop. So that should be a tough area. So going forward, 4,900 would be a big resistance. So closer to a risky bet would be to trade actually short around that 47, 4,800 area, with a stop loss at 4,900. So for now, no trade, but if it bounces much more, would actually be a short trade rather than a long one.
That's a take on Polycab right now, but IndusInd Bank should be reporting its numbers soon. Of course, there's a press conference, I think, somewhere between 4 to 5 p.m. So maybe just at that closing mark, we'll get the earnings. But what are the expectations? Let's go across to Gaurav to get a sense. Hi, Gaurav.
So IndusInd Bank will come up with the result, and before the results, let's see what consensus is expecting from the bank. So net interest income is expected to increase almost by 16.5%, and it could come somewhere in the range of 5,200 crore levels. If we talk about PPOP, which is pre-provisional operating profit, that is expected to increase almost by 8%. And if we talk about PAT, which is profit after tax, that is expected to increase almost by 16% this quarter, and it could come somewhere in the range of 2,270 crore rupees. Now, talking about provisions, consensus expects banks to reduce their provisions this quarter almost by 7.8% on a YOY basis. And if we look at the provisional data from the bank, they have already registered strong growth in advances of 20% on a YOY basis, while deposits were also up almost by 13.5% on a YOY basis. Talking about the retail deposits share stood at 45% of their total deposits, and CASA ratio, which was slightly down by 90 bips, stood at 38.5%. But from now on, what we can expect from management is that we should look for any commentary on the margin trajectory, because interest rates are elevated and that is likely to impact the profitability. Let's also look at any commentary coming up on the loan growth in FY25. OPEX number is likely to stay a little elevated, and that is why let's also look at any commentary or the number which would come up for the operational expenses. And lastly, let's also look at any commentary towards CASA ratio, because CASA ratio, if it is improved, it will if it improves later, it will help the bank to maintain its net interest margins. So these are some key takeaways from what the street is expecting from the bank. So let's wait for the result and let's see how it turns out for the bank.
Okay, that's the take coming in, and what do I anticipate from IndusInd Bank? But let me take it across to Sharad, find out what's the buzz across dealing rooms. Sharad?
In focus is Sirca Paints, which is a 2,200 crore market cap paint company, and the buzz in the street is that the company is expected to commence its additional capacity operations in its Noida facility. Now, importantly, from this plant, there will be a manufacture of paint which will be used in the wood coating segment. Now, importantly, if you look at it, this capacity of the entire company is expected to be roughly 16,000 tons when it comes to the categories of PU, NC, melamine, as well as thinner products. Now, the channel checks also suggest that the Q3 numbers are expected to come on the stronger side as well. And if you look at the stock itself, the stock has given almost 40% returns to the investor from 2023 lows, and a slight correction was there over the last 2 to 3 trading sessions as well. Now, importantly, the stock is also held by Mukul Agarwal promoted entity, roughly holding 3% odd stake, and also from the family offices of prominent business houses.
Okay, so that's the latest coming in as far as that cover on the last street is concerned. Just waiting back for some more big buzzers and seeing what's happening. HUL, of course, is something which is going to be in focus tomorrow. Mayuresh, the commentary so far that we've got initially from the provisional numbers of all of these FMCG companies is not very enthusing. Part of them are saying that there is sign of rural recovery, but it's not, that visible right now. How should one approach the entire FMCG basket right now?
Being very selective, Anisha, very frankly, because I think a lot of players have, as you alluded to, clearly mentioned that rural recovery might be a little bit more sticky in the next couple of quarters. And that's clearly getting played out in terms of how the volumes have grown for companies which have probably reported numbers. Obviously, I think the kind of inflationary impact that we've seen because of lower rainfall and decrease in discretionary spending, because rural does form a large part of the FMCG volume universe. The volumes are going to be a little bit on the lower side, which means the price effect will also not be seen. If that probably happens, the combination of the volume and value growth might be missing over the next couple of quarters. The best case scenario that gets built up for FMCG companies are on two counts. One, in the coming rainy season, I think over the next couple of quarters, if normal monsoons are expected, there can be a healthy growth that can come through in the second half of the next financial year. And the expectations is that input costs should largely remain benign, which means EBITDA margin should see reasonable amount of stability and growth going forward. Valuations have always been on the higher side, and therefore we are being a little bit more selective here. Obviously, the acquisitions done by Tata Consumer are in the right space in terms of what they are expecting the overall volume and value growth to happen over the next few years. But I think within this space, I think packaged foods, QSR companies might be a little bit better off compared to the core FMCG companies, at least at this point.
Okay, since you're talking about the packaged companies, let me just bring up the intraday chart of Pratap Snacks and see what that stock is up to, because of late we have seen quite a bit of move on that one as well. Let's see whether it's reacting. It's up a bit in the trading session. We'll keep tracking that one because there are those important lines at the bottom of your screen wherein it seems that Haldiram is eyeing a majority stake in Pratap Snacks, and they're seeking, and of course the VC firm Peak 15 is looking at exiting the 47% stake that it has in Pratap Snacks. So those are the lines for you at the bottom of the screen, and the stock is reacting to that. It's building on to further gains. Kunal, what's your take on the charts of Pratap if you track it, and HUL as well?
So Pratap Snacks, we were, I think discussing this a couple of days back that the stock at 1250 levels was on the verge of a breakout. Now, I think over there, I had mentioned 1400 could be a target. So even though the stock is still below its life high levels, I think of 1450, 1500 odd mark, but the recent recovery, the breakout about 1200 levels indicated that the momentum has come back into the stock. So I think 1400ish is where I would believe that the stock should head towards. So maybe another, 70, 80 points, 90 points further from current levels is what I would expect that this momentum would probably get the stock towards. For HUL, on the other hand, the stock has been absolutely sideways. There was a point where HUL has been a huge underperformer with respect to the FMCG pack, like Tata Consumers, etc., had given a breakout. So I think Marico, HUL, these are the two names which have underperformed significantly compared to Britannia. Nestle over the last 1 month has corrected post the split. I think overall, I would believe HUL can stand to outperform from here on. So I would actually be a bit contra bullish on HUL in case if the stock drops down to say 24, 70, 75 mark on the spot levels, could be a good contra buy opportunity.
Okay, that's Unilever in trade for you. I mean, I was just thinking to think of it. There were the rumors were so strong that Haldiram's itself is a takeover candidate, and now here's Haldiram's buying Pratap Snacks. At least that's what the wire agency seemed to be reporting. But anyway, we'll address that bit of news once we have some confirmation to that extent. But Unilever too is all set to come out with its numbers. Let me take it across to Vinny, find out what to expect.
So absolutely, in terms of HUL's numbers for Q3 FY24, we're expecting a muted performance, nothing exciting on that front. In terms of the revenue growth, around a 2% revenue growth is what we're expecting. Profits and around 8.7% growth, while margins a slight bit of an expansion, 80 basis point expansion on a year-on-year basis. EBITDA margins are expected at 24% or approximately. Volume growth, like last year, we have seen, last quarter, I beg your pardon, we've seen in terms of the low single digit. That's what expected to continue this time as well. So 2 to 3% volume growth is what we're expecting from HUL. Now, let's not forget, the trends that we've seen in Q2, similar trends is likely to be seen in terms of the competition from local players, regional players. Where is that headed? That is expected to see an increase as well, is what the indication we're getting. So yes, that continues to be maybe a pain point in some segments for the company. Premium segment, that's expected to do better than the mass segment. And personal care performance, we're expecting that to be soft due to the delayed winters. Other than that, food and refreshment, low single-digit growth as headwinds were there in the nutrition portfolio. Let's not forget the retail milk prices. That's not seen a sharp cut down coming in. So in terms of Horlicks, we are not expecting any price drop in Horlicks so far as well. But let's keep an eye out on all those commentary fronts as well from the management, especially in terms of competition from regional and local players. Other than that, in terms of rural versus urban demand, any green shoots in rural area, that's something that we want to know, especially coming in from such an FMCG major. Other than that, the HFD segment and commentary on margins and RM cost is going to be key to watch out for as of now from HUL.
Okay, that's that on HUL, but here's Ashesha telling us about Ultratech Cement. A revenue uptick seems like it's going to be on the cards, and higher realizations as well are being penciled in. Ashesha, what's the expectation?
Well, yes, we are expecting good set of numbers from Ultratech Cement this time. Realizations are expected to rise by as much as 2% on a sequential basis on account of price hikes that were taken at the start of the quarter. Remember, cement prices did decline in the month of November and December, but on a sequential basis, cement prices rose by nearly 3%. Meanwhile, total costs also declined by as much as 3 to 4% on a sequential basis due to lower power and fuel costs, as a result of which EBITDA per ton is expected to inch higher by 20% on a sequential basis, led by dual benefit of higher realizations and lower costs. Remember, company has already reported consolidated volumes at about 27.3 million tons, which will be an uptick of 2.5% on a sequential basis and about 5.5% on a year-on-year basis. Consolidated revenues could come in at about 16,700 crores, up 4% sequentially. Margins too are expected to expand by as much as 300 basis points on a sequential basis. So yes, all in all, we are expecting good set of numbers. Higher realizations led by higher cement prices and lower costs will lead to EBITDA per ton expansion this quarter.
Right. Okay, Ashesha, we'll leave it at that. That's the expectation coming in from Ultratech Cement. Meantime, keep your eyes out on Polycab. That's fallen about 0.6%, and I think that's a fall of nearly about over 1% from the day's highs for Polycab after its earnings are getting digested. But I think we can take it across to Anisha as well and begin winding up the day. We will do that in just a short while from now. But let's also get in some BTST trades on that note. Naresh?
Vedanta first, the stock has seen a good recovery in the day. Stop loss at 264, target price of 275. Second is the one Petronet, which has shown relative strength, hitting new highs for the week out here of fresh breakout. Stop loss at 235, target price of 245.
What about your BTST trades?
So I'll go with two buy calls. The first one is around CESC. The stock looking attractive for a trade. Targets of 166, stop loss at 132. And Bank of Baroda apparently is one of the stocks which is actually showing signs of good resilience. So very good pickup from those sub 220 mark for the stock. I think at 228 look attractive for a target of 238. So another 5% on the upside is what I'm expecting for the stock in the near term. Stop loss at 222.
Naresh, I beg your pardon, Mayuresh, what's the strategy for investors who are fully invested right now? Would you say at least take some chips off the table, be a little cautious?
That might be the strategy, Aisha. And I think being a little bit more selective does warrant attention in these markets. Any decline that comes through, and if there is no substantial breach of 21,050, which is a 10 weekly moving as we see it at markets per India, I think that can be a good buying opportunity from those levels. So I think selective spaces like energy as an example, probably looking at retail as an example, some names in logistics, which in my opinion can do extremely well over the next couple of years. And few of the PSU banks, I think a few of these spaces, if the market does decline and give an opportunity, look very, very interesting from an earnings perspective over the next 12 to 24 months.
Right. Okay. Well, central government offices, it seems, are going to get a half day on Monday, January 2nd, on account of the consecration of the Ram Mandir in Ayodhya. Let's see what the exchanges decide, Kunal, on what to do, on whether or not Monday is going to be a trading day or a holiday.
Even central government offices are on half a day.
Half day, yeah. We're going to already have a additional half day on Saturday.
So additional half day on Saturday and full working day on Monday.
Just not in for it right now. But anyway, let's see. That's only what the Union Minister has said about central government offices.